So under the receivable management, the financial manager has three key decisions areas, which you can see on your slide, starting with formulation of a credit policy, credit evaluation, and credit control. So, and then there are subdivisions under each of the key decision area. We start with the first key decision area, which is the formulation of credit policy for your business. Now, the financial manager has to decide whether the firm should go for a liberal credit policy or for a conservative credit policy. What do we mean by liberal credit policy? Liberal credit policy is that without a proper check of the customer, you are offering credit sales to them in the expectation that this will increase your profits. Okay. Now, yes, increased sales might increase the profits of the business, but there is also an increase in the possibility of bad debts when you're not going for a proper credit check of the customer. On the other hand, if the firm adopts a conservative credit policy, it is going for very stringent checks and not offering credit to each and every customer, then the sales might be lower on the low side, profits might be lower than the first situation, but your risk is also lower. The risk of bad debts is also greatly reduced. So this trade-off needs to be maintained by, needs to be checked and decided on by the financial manager. What other decisions are taken? The length of the credit period. For how long are you offering credit to the customers? Now this can range from say 15 to around 60 days. 2 months का credit देना है, 1 month का देना है, depending on the nature of your business, what the competitors are following, you decide on the length of credit period. Then third is cash discount. What is cash discount? If a customer, if a debtor makes the payment on the debt before the expiry of the credit period, then some discount can be offered on the cash payment. That becomes a cash discount. And for how long are you offering this cash discount? से आपने क्रेडिट पीरियड 1 मंथ का दिया है, और अगर कस्टमर 20 डेज के विद इन पेमेंट कर देता है तो आप 2% का एडिशनल डिस्काउंट दे रहे हो. तो 20 days becomes your cash discount period, while 30 days is the credit period. So a credit policy, as I told you, is involving a trade-off between liquidity and profitability. The more liberal the credit policy is, more profitable it is for the business, but the liquidity of the business will also fall. On the other hand, with a stringent credit policy, you are able to make maximum sales on cash basis. Your liquidity will be high, but then your profitability will be low. So, under the credit policy, first you check the credit standard. That is, you check the customer credit worthiness of the customer who is wanting to enter into a credit purchase with your business. Okay. Now for the credit check of the customer, there are a number of methods which are available, which we'll discuss in detail in the next key decision area. Then length of credit period, as I have explained you, ranges from 15 to 60 days normally for every business. Now it can be shorter or longer depending on the type of business you are in. Third is cash discount. So as I explained you, there is another way of quoting the cash discount. If you have a look here, credit terms of 2 by 10 net 30. So this means 30 is the credit period. You have to make the debtor has to make the full payment by 30 days, by the 30th day. Then discount of 2% is offered if the payment is made by the 10th day. So 2 is the cash discount. 2 is the cash discount. 10 is the discount period, DP, and 30 is your credit period. So this is how the nomenclature for cash discount is given in financial terms. Okay, so these these pointers are considered when the firm is framing its credit policy. The second decision area is the execution of credit policies. So, how to execute those credit policies which have been decided in case 1. First is evaluation of credit applications. You do a background check of each customer who is approaching the business for credit purchases. How do you do that background check? You try to gather information on the credit history of the customer, whether that customer has availed credit facilities in the past and to what extent has he performed the credit successfully. Okay, he has paid off the debt which he has taken successfully. So for that you look at the financial statements of your customer. Now here by customer I mean say the firm or the company which has approached you for a credit purchase. So you look at the financial statements of that corporate or partnership firm. If individual sole proprietorship है तो उसका भी आप financial statement check करोगे. Then report of credit rating agencies. Again, this is for an organization. Okay, so say that organization has issued some debt in the past, तो उसने अपनी रेटिंग करवाई होगी किसी क्रेडिट रेटिंग एजेंसी से, लाइक से मूडीज, S&P, आइक्रा, केयर. तो उनकी जो पास्ट हिस्ट्री है with this regard will let you know how efficient that particular firm is with respect to credit worthiness. Then reports from banks. Now this can be for individual or organization, whether they have taken loan in the past and they have paid the EMIs on time, कुछ डिफॉल्ट हुआ है या सारी प्रिंसिपल पेमेंट पे हो चुकी है. This will also help you evaluate the credit worthiness of your customer. Then credit scoring. Credit scoring is for an individual customer. जो सिबिल स्कोर होता है कस्टमर का, उससे भी पता चलता है कि how reliable is this customer and whether you can offer him facility of credit sales or not. Other sources for information from on the firm can be through newspaper reports, public records, income tax statements, etc. So, third key decision area is credit analysis. So once you have collected all the information, now you will analyze that customer on 5 C's. First is the credit character, that is the reputation of the customer, depending on the past history, whether he'll be able to meet the obligation of payment. Then is capacity. Capacity is ability of potential customer to utilize the loan effectively, and profitability. Even if you forward the credit facility to the customer, whether he is able to put that facility into a profitable use, how efficiently is he running the business through these credit facilities, come under the capacity of the customer. Then capital. Capital is क्या फाइनेंशियल नेटवर्थ है कस्टमर की या उसकी फर्म की. Collateral. Collateral is the security which is offered, which is pledged against the loan taken. And last is condition. Condition हो जाएगा बिजनेस से जो बिजनेस के रिस्पेक्ट में व्हाट इज द सिचुएशन इन द मार्केट. Okay, and the stage of business cycle the firm is in, whether the firm is in a growth stage or a decline stage. All these points are also considered. Market में recession है या growth है, expansion है, all these points are evaluated. Then collection policy is formed. Firms institute a separate collection department wherein they keep a track of how and when to approach particular customers. For that they use ratio analysis. उसमें सबसे important है आपकी debtor turnover ratio. To what extent activity ratios हमने करी थी accounts में, तो debtor turnover ratio का formula. Does anyone remember what was the formula of debtor turnover ratio?
Total credit sales divided by average debtors.
Very good. So the credit sales divided by average debtors, and under debtors you include both individual debtors and your bills receivable. Opening plus closing balance divided by 2. And then your credit period would be, say, in number of days 365 या months में होता था तो 12 divided by DTR. So this gives you the credit period in days. These ratios are then used to check the due date of the receivables, what is the length of time that is offered, and in how much time the firm is able to recover money from the debtors. Second technique to monitor the receivables is aging schedule. Important with respect to short notes. What is aging schedule? Aging schedule is that you prepare a chart of your debtors on the basis of what is the time period for which the debt is still outstanding. तो आप क्या करते हो, आप हर डेटर का चेक करते हो कि कितने टाइम पीरियड से अमाउंट जो ड्यू है दैट इज आउटस्टैंडिंग. So you see, this is an example of aging schedule. Number of days outstanding less than 30 for 60% of the debtors, more than 121 days for 5% of the debtors. जितना ज्यादा एज होगा रिसीवेबल्स का उतना ज्यादा पॉसिबिलिटी इंक्रीज हो जाती है ऑफ नॉट रिकवरिंग योर डेट. The possibility of bad debts increases with an increase in the age of the receivable. So there is a direct relation between the two. So if a company is preparing a schedule on the basis of age of the receivables, it makes it easier for the company to keep a track on the debtors. Okay, and more is the age, higher is the possibility of bad debt. Okay, so this was the theory part. Any question? Any question from this? So yes or no, at least you can answer in the chat box. Okay, so next we move to the practical part, which is on evaluation of credit policy. So आपकी कुछ existing credit policy है and the firm wants to change that credit policy. So how do you evaluate whether to go ahead with this change or not? So for that, you will keep a check on the profit which is being made on under the individual credit policies. And if the profit is increasing, you can go for the proposed credit policy. So have a look at the format under this. First, we take the sales and we calculate the operating profit. So sales minus variable cost gives you contribution less the fixed cost gives you the operating profit. Second step is to calculate the cost of receivables. तो प्रॉफिट अर्न कर रहे हो, क्रेडिट सेल्स कर रहे हो, अब आपको क्या कॉस्ट पड़ती है ऑफ द क्रेडिट सेल्स. फर्स्ट एलिमेंट अंडर दिस इज कॉस्ट ऑफ फंड्स इन्वेस्टेड, bad debts, then administrative cost. Cost of funds invested is variable cost plus fixed cost into credit period. So if it is in days तो 365 से डिवाइड कर दो, अगर months में है तो 12 से डिवाइड कर दो. Bad debts will be given as a percentage of credit sales and administrative cost will be your collection cost, cost of legal notice. तो ये सब cost total होके आपको cost of receivables देती हैं and your net profit will be operating profit minus cost of receivables. So what we do is we'll take up one question on this and the concept will be more clear. So have a look at the question given on your screens. H Limited has a present annual sales of 10,000 at rupees 300 per unit. The variable cost, fixed cost is given and the present credit period allowed by the company is 1 month. So there are two proposals made. One is to increase the credit period to 2 months. Second is to increase it to 3 months. There will be an increase of 50,000 on account of increased sales beyond 25%. तो मतलब इस केस में 3 months वाले केस में आपकी जो फिक्स्ड कॉस्ट है दैट विल इंक्रीज बाय 50,000 and company plans a pre-tax return of 20% on investment in receivables. So you are required to calculate the most paying credit policy for the company, so which means existing, then proposal 1 and proposal 2. Three of them need to be considered to decide which is the best credit policy for the firm. So point A was to calculate the operating profit and point B was to calculate the cost of receivables. So let's start with the first point. So sales in units, so per unit cost is 300. 30 lakh. Less the variable cost will give you contribution. Okay, so next we calculate the variable cost, which is 200 per unit. So in the first case, the operating profit is coming to 7 lakh rupees. Please complete for proposal 1 and proposal 2. How much is the operating profit coming to? Yes, what is the operating profit under proposal 1 and 2? So 8 lakh 50,000. and 9,50,000. Rest of you also check you're getting the same value. So now to calculate the desired return on the receivables, आपको दिया हुआ है 20% is the expected pre-tax return on investment in receivables. So you need to calculate how much amount is locked up in receivables. I am calculating for the existing policy. Similarly, calculate for proposal 1 and 2. So the investment in receivables is equal to fixed cost plus variable cost into जो existing credit पीरियड है वो 1 month का है तो हम मंथली ले रहे हैं तो 1/12 कर लेंगे fixed cost plus variable cost into 1/12 and return will be 12% of this value. So let us see how much is the value coming to. 23 lakh is the total of fixed cost and variable cost. So 20% of 1 lakh, 91,667. So this comes to 38,333. This is your desired return on the investment in receivables. Your bad debts are expected to be 1%. So अभी आप क्या assume करोगे that all these sales have been made on credit basis. So 1% of 30 lakh will be 30,000. So your total cost of receivables is coming to 68,333, and accordingly your net profit under the first case can be calculated. This is coming to 6,31,667. This is the net profit under the existing situation. Similarly, you calculate for proposal 1 and 2, whichever option gives you the highest profit, that will be chosen. So please calculate for option 1 and option 2 what is the net profit coming to.